Hello, and welcome to the Virtual Investor Conferences. My name is Athena Katsoulis, and on behalf of Social Suite, as well as the OTC markets, we're very pleased to have join for our next live presentation from Karora Resources, a gold production company. Please note you can submit questions in the box on the left of the slides. You can also view a company's availability for one-on-one meetings through the scheduled meetings tab found in the conference platform. At this point, I'm very pleased to welcome Oliver Turner, EVP of Corporate Development of Karora Resources, which trades on the OTCQX Best Market under the symbol KRRGF and on the TSX under symbol KRR. Welcome, Oliver.
Yeah, thank you very much for the kind introduction, and good morning, everyone, or good afternoon, depending on where you are tuning in from. So as I said, my name is Oliver Turner for Karora Resources. I'm going to be taking you through this presentation this morning. I'll place it into context for new investors to Karora, as well as those of you who've followed along with our story over the last several years. Obviously, we've done several presentations on this platform as well, so happy to bring you some updates and talk about some exciting catalysts over the remainder of the year. Before we get started, I'll draw your attention to the usual forward-looking statements and disclaimers to read at your own leisure. This slide here really captures a summary of who Karora are and what our mission is going forward. We are growing our gold production in Western Australia, which is a Tier 1 jurisdiction. That growth is self-funded from internal cash flows, and we are, at the same time as growing gold production, growing nickel production. This is all being managed by a management team that has done this before in past enterprises, growing from single orphaned assets to multi-assets feeding multiple mills. And we're very proud to say that 2 years ago, we were the first carbon neutral gold producer, and we maintained that last year and look forward to advance that initiative going forward, along with some exciting upcoming updates and announcements with respect to our carbon emissions. This slide summarizes what I just mentioned there previously. We are going to be updating our 2022 ESG report here in the next several weeks, so that I have a far more comprehensive update with respect to our ESG efforts, but it remains a core focus of the business. With respect to where our assets are, we are located in Western Australia, which is the #1 gold mining state in Australia, and we're in the best place to be in Western Australia, which is the Kalgoorlie Trend. The graphic on the far right there shows you our relative position to the KCGM super pit, which is a legendary super pit, which also has many, many decades of production ahead of it as well. And actually that page in total that you're looking at, about 100 million ounces have come out of that page to date. Our assets are the Beta Hunt underground mine, the Higginsville Central mines, the Spargos open pit mine, and then of course we have 2 mills in this district, the Higginsville 1.6 million ton per annum mill, as well as the Lakewood 1 million ton per annum mill, which we acquired early last year as part of our expansion plan. Important to note is that green shaded area, which is 1,900 square kilometers, we are actually the largest landowners in the Kalgoorlie belt, which hosts all of those very large deposits. We actually own more land than Goldfields, which is very, very significant and certainly exciting from a future exploration standpoint. With respect to the team I mentioned that's done this before, scaled companies into mid-tier and senior producers, we have Paul Hewitt, who's the chairman and CEO, former president and CEO of Klondex, took that from a single asset, orphaned asset in Nevada, bolted on several other assets and mills, and eventually sold it to Hecla for over $700 million. Lee Junk on the far right there is our new managing director of Australia, has a long history of building companies in Australia, and not the least significant of which, of course, was the Silver Lake and Dorian merger. Very well followed there, has been in the chair now for several months, and is certainly driving some very exciting initiatives, which we'll talk about a little bit later today. So 2 very experienced gentlemen at the helm. Rounding out the executive team, of course, we have Bevan Jones, who's our Chief Operating Officer in Australia. Importantly, he comes from the St. Ives gold operation, that's Goldfields operations, which is literally just over the fence from Beta Hunt, and scaled that operation very significantly while reducing costs, which is fantastic for us. Barry Dahl's our Chief Financial Officer, and Michael Doolin, SVP Technical Services, both ex-Klondex, and we're part of that success with Paul and myself on the far right there, history in the capital markets and mining engineering prior to joining Karora to run corporate development. There's probably no more important slide than this slide in the deck with respect to how we've delivered since the new management team came in mid-2019 and acquired the Higginsville mine and mill, which really was a transformational acquisition for this company. As you can see, we've delivered quarter after quarter with respect to production. And if you took this chart much further to the left or back further in history, you would see very irregular and low production numbers and sometimes no production numbers. So we've really turned this company into a reliable, growing, cash flowing gold producer, which has enabled us to do all of the growth activities that we've been doing over the last several years with respect to growing the business. We've scaled the operation, and as we announce that growth plan, and I'll outline the future guidance here with respect to that growth plan, which takes us to almost 200,000 ounces by the end of 2024, and then from then onwards, we'll be scaling as well. You can see the last few quarters, we've stepped up the ounce output over the last several periods, and that's due to the fact that we acquired the Lakewood mill in the second quarter of 2022, which really allowed us to jump up that production, which has been fantastic. We announced another record quarter in the second quarter, over 40,000 ounces produced. That brings us to just over 80,000 ounces in the first half of the year. For context here, we're about 145 to 160,000 ounces for 2023. So positions us very, very well for the second half of the year. And our AISC numbers, which will be announced here in August, are looking good as well. So certainly tracking well with respect to guidance, and certainly well with respect to our internal budget. Here's the guidance I mentioned previously for 2023 and 2024. Upper end there of 160,000 ounces in 2023 and then 195,000 ounces in 2024, which we're certainly on track to deliver. The AISC guidance there is well within the range for Western Australian gold producers, if not slightly better. Obviously, over the course of the last year and a half, we've seen a paradigm shift with respect to input costs when it comes to consumables, labor costs, and just the general cost of doing business everywhere in the world, but specifically Western Australia and the mining sector has seen a concentrated focus of that. So that AISC guidance bakes that in, and we're certainly confident in delivering it. We also have payable nickel production. I'll talk about that a little bit more in the presentation later on, but that plays a increasing role over the course of the next several years with respect to byproduct credits, and something that Lee Junk, who has a strong history in nickel as well as gold, is certainly very excited about moving forward. All of this, we're growing the business while we're continuing to deploy significant capital into exploration and resource development, which has paid dividends via the drill bit and our expansion of resources. So we're still putting over $20 million a year into the ground, which for a company of our size, while growing, while deploying into capital programs, is certainly a great place to be. Not many companies can do that all at the same time with just a couple assets. In terms of key milestones moving forward, the growth plan at Beta Hunt really is the addition of a second decline. The development work for that decline is, the ramp part of the decline is complete. That was completed earlier this year. Over the course of this year, we're about halfway through construction of 3 ventilation raises. The first one is complete and commissioned. That goes up to surface, and the second 2 are internal ventilation raises, which will be completed by the end of 2024. That is the bottleneck for really ramping up production at Beta Hunt and exploration activities at Beta Hunt. Once we have that additional ventilation capacity installed with the 2 ramps, we're able to increase the amount of equipment we have underground, both with respect to drilling and with respect to production. We're also reevaluating our nickel projects, or I should say updating our evaluations of our nickel projects to see if we can be more aggressive than the PEA that was announced last year. And then we are also at Lakewood doing some work to expand that to approximately 1.2 million tons per annum, which would increase our milling capacity even further in 2024. The Lakewood Mill acquisition, which was completed earlier last year, was another transformational acquisition for the company. Those of you that listened to my presentations before understood the context of why that was executed. The Higginsville Mill expansion, the quotation or the price quote for which was done in 2020, had seen a significant expansion in terms of costs, and we ended up moving towards replacing that expansion with the acquisition of a ready and operating mill. That was the Lakewood Mill. It also accelerated our timeline by about 14 months, so paid dividends from that perspective in terms of avoiding major delays, which we've seen in projects worldwide over the course of the last several years. So that really elevated our production capacity. It's actually closer to the Beta Hunt mine as well, and we get excellent recoveries through it. So to date, it's performed extremely well for us, allowing us to generate those additional ounces that you've seen. Had we not acquired Lakewood, that those additional ounces and that additional cash flow would not have been realized at this point in time, which is important context to understand. And we're looking forward to expanding the liquid mill going forward. No shortage of feed for these mines. When we acquired Higginsville, we did acquire about 32 different brownfields targets that were ready to be drilled in various stages of resource development, from exploration targets all the way through to existing resources. So lots of feed going into the mills, the Higginsville mill, I should say, over the course of the last several years, which has been critical to get the company to where it is today in terms of being able to execute this growth plan and having the cash flow capability to deploy into these assets the way that we have. That includes $20 million a year to exploration. With respect to Beta Hunt, we have added a huge number of ounces there, and I will talk about that a little bit later on, identified many new shear zones, and continue to expand all the existing shear zones along strike and at depth, which is also very important. So lots of feed going into both Higginsville and Lakewood, which is a great place to be, and we're going to continue to add to those resources with an aggressive drilling program over the course of this year, as you see outlined here, about 80,000 meters of drilling in gold and 20,000 meters in nickel, but you'll see heavily weighted towards Beta Hunt. The simple truth there is that the return on investment due to the infrastructure that we have in place at Beta Hunt is tremendous. And I'll outline that a little bit more as we get through those slides. So stepping into Beta Hunt here, one of the big benefits that we have at Beta Hunt is the fact that it was a nickel operation for well over 40 years. And you'll see it on the next slide here highlighted. But basically all of those gray lines that you see on this page there is over 400 kilometers of existing infrastructure in place, which we get to leverage. It's in fantastic condition. We get to leverage that for gold exploration, gold production, and nickel exploration and nickel production, which has been a huge advantage to us. Instead of having to develop all of that of ourselves, which in today's dollars would cost about $2 billion, we've actually been able to leverage it for generating profits from the resource base that we've developed, which has been huge. The expansion plan, as I mentioned, at Beta Hunt is the addition of the second decline, which, as I mentioned before, is now complete. That brings the trucking capacity and mining capacity at Beta Hunt up to 2 million tons per annum from 1 million tons per annum with the previous decline. Now, an interesting little note here is that we've actually managed to do over 100,000 tons a month with that first decline. That's going up from about 30,000 tons a month when we took over the asset. So tripling productivity at Beta Hunt with the same asset, with the same infrastructure, has been a wonderful success over the last several years. So that gives you a clue that the 2 million tons per annum that we're targeting with two declines is certainly very achievable. As I mentioned, $2 billion of infrastructure, 400 kilometers of infrastructure in place, and that's allowed us to add these additional shear zones, drill off these additional exploration targets, and expand the resource. And we'll talk about a few more of those targets as we step through the slides here. With respect to resource growth at Beta Hunt, our last resource update, which was in September of last year, saw significant increases in ounces, as you see delineated on this table right here, in the M&I and in the inferred category, as well as an increase in reserves, which has basically been the story over the course of the last several years. We also have a very significant nickel resource that's been outlined there that we'll touch on a little bit later on. But that $20 million that we've been putting into the ground every single year, which in past years was about 60-40 weighted from Beta Hunt to Higginsville, has paid dividends in terms of ounce additions, and no chart captures it better than this chart right here. So for those of you that understand the context and the history of Karora, you understand that one of the most important things that was executed on in 2020 was the unwinding of significant royalties at Higginsville, which has allowed us to mine and explore there, as well as a significant reduction in royalty at Beta Hunt, which has allowed us to do the same thing there. So you've seen the first major drilling campaign, which was executed in 2019, basically deliver a huge number of ounces to the resource inventory. And we've executed on that every single year. And not insignificantly, if you look in the bottom right-hand side of this slide right here, that is all net of significant gold production of about 400,000 ounces over the course of the Beta Hunt's gold mining life, which is very, very important context to understand. So we're sitting here today at well over 2.2 million ounces, closer to 2.3 million ounces in total. 2.4 million ounces in total at Beta Hunt, and we expect that to continue to grow, and we'll be updating our resources, a resource estimate over the course of this year. Last year alone, we added a significant amount, about 500,000 ounces, to inferred resources, which was which is very, very important. Where are those ounce additions coming from? This is a plan view of Beta Hunt and the major structures, gold-bearing structures or deposits that are hosted at Beta Hunt. So you're looking down upon the asset right here. A Zone and Western Flanks, which you see in sort of yellow, shown in green there above the yellow infrastructure. That was the original host for all of the gold resources at Beta Hunt. Western Flanks really is the engine room. It's been mined for several years now and delivers about 60 to 70% of our tons and ounces at Beta Hunt. We continue to extend it at depth along strike, particularly to the north with Western Flanks North, and then the same thing at A Zone. A Zone is famously host to a lot of our coarse gold occurrences, and we do still sometimes get those in stopes, which is always a nice added benefit that we continue to enjoy. And then at the same time, from existing infrastructure, we've added several new shear zones. So Larkin is probably the most developed and famous one that's now into resource. From first discovery to first resource was about 18 months, which is just phenomenal for an underground mine. We've added Mason, which is looking like the next one up, getting some great drill results there. We should have some additional drill results out from Mason in the next several weeks here. Cowsill is also another shear zone that we've added. And then, of course, Fletcher, which we announced some phenomenal drilling on earlier this year, a couple months ago, which was earlier this year, which we'll talk about in a second here, is starting to look like a Western Flanks analog. Sorensen to the north, A Zone North, Western Flanks Northeast Alpha, 50C nickel trough. You get the message here. The idea is significant growth via the drill bit, which is just turning Beta Hunt into a truly large, very long-lived asset. Western Flanks, which saw a very significant increase in inferred resources last year. Just for context here, a key focus of this year's drilling program is infill drilling of a lot of the inferred areas from last year's increase. The reason for that being we need to increase the confidence in those areas to bring it up into the indicated resource category so that can be brought into the reserve and, of course, into the mine plan. So a big portion of this year's focus on drilling has been on resource development and resource upgrades. Of course, we only have $20 million to spend while we're expanding the assets with our capital program. So that means a few more dollars have been taken away from exploration. As we ramp off, or I should say ramp down the capital program over the next year and a bit, we'll be able to allocate more and more dollars into exploration at the same time as resource development as we continue to generate more free cash flow, and that can go back into the ground. But important context to understand there in terms of what to expect from this year in terms of a split between resource development and exploration. I won't belabor this slide here, but one thing I will talk about is interestingly is a lot of the grades seem to be improving while we're getting deeper at Beta Hunt and at Western Flanks specifically, and that's not over massive distances. We're talking about 100 to 150 meters below where we are today, so that certainly bodes well for future mining. This is another example of some of those increasing widths and grades that we're seeing. If you look at the right-hand side, there's 5.3 meters of 13.6 grams. That's a little bit deeper at Beta Hunt and on Western Flank specifically, and that's only about 150 meters below where the existing mineral resource is, which is not a long way to go when it comes to mining at depth. The Fletcher zone, we announced some results a couple months ago, some phenomenal results, some of the best ever returned at Beta Hunt specifically. 46 grams over 7 meters, 6.5 grams over 26 meters. Great widths. Those are two separate intercepts, by the way. Fantastic grades at the same elevation as we're currently mining, and that's been extended, over 900 meters. So, and that's parallel to Western Flanks. Could be another major source for feed for us, and has the potential to be higher grade, which of course is just straight free cash flow and leverage into the bottom line at Karora Resources. Mason, I mentioned, is sort of the next one up. That's southwest of Larkin, as you can see on the right-hand side there. We're seeing some great grades there, as well as some great thicknesses. Expect to have another update out on that in the coming weeks, which we're quite excited about. And then Cowsill, which is northeast of it, will be the next one to be drilled. So you're starting to understand the trend here. Expect more ounce additions over the course of the next several years here at Beta Hunt. We're basically replacing depletion, but also expanding the resource base. With respect to a real gap in drilling, there's an area south of the Gamma Fault. I won't go into too many details there given the time constraints that we have today, but suffice to say that there was a big gap in drilling historically from surface that never really tested this area. It's about 3 kilometers from the Gamma Fault, which is the second fault on the right-hand side there, to the end of our property boundary. And we have discovered a brand new nickel zone as well as some phenomenal gold grades there as well, and certainly presents a compelling target for us moving forward. As I mentioned at the beginning of the call, the bottleneck for additional exploration and mining activities is the commissioning of all 3 of those vent raises, which we expect to happen by the end of this year. Once those vent raises are delivering more ventilation underground, we can really ramp up activity there. So certainly an area that we're excited about. We've already got an exploration drive in there. A large portion of the nickel resource, which I'll talk about in a few slides here, is hosted there. So we are looking forward to getting into that area in 2024 and beyond, because we certainly think that this asset has a long way to grow, both at depth and along strike in the Hunt and the Beta blocks, which are the 2 existing blocks, but also the Virgin Gamma block, which is really untested. With respect to the nickel side of things, so I mentioned that Lee Junk, who's joined us over the last several months here to run Australia, really has a strong track record in the nickel space as well, and that's how he started his career. He is absolutely enthralled by the nickel opportunity at Beta Hunt. It's a very unique operation. I can't think of any gold operations in the world off the top of my head that are primary nickel associated discretely but adjacent to the gold like we have at Beta Hunt. And the cross-section on the right-hand side really shows you the relationship between the gold and the nickel. So without going into too much detail, you basically have these nickel troughs. The 30C nickel trough is labeled there, located at the top of these gold shear zones that we're mining at the basalt ultramafic contact. So between the purple and the pink there. So you have these large gold shear zones, which can be accessed from existing infrastructure. And you see that drift that's going across the page there. That was in place for about 20 plus years. After we unwound the royalty, we channel sampled, found 14 meters of 5 grams. We knew we were in a new shear zone, drilled it off, both gold and, if you look at the scale on the bottom right-hand side, within 10 meters, nickel. And lo and behold, we drilled off the new Larkin zone, which, as I mentioned before, was in resource 18 months after discovery, as well as a new nickel trough. So really a fantastic setup where we can mine gold first, then nickel from the same infrastructure. And it's all hosted in a very competent basalt unit, which means that ground support requirements are minimal and a great place to operate. This is the nickel resource that we've updated once since our first nickel resource, about 34,000 nickel tons hosted in situ. That's over $1 billion worth of nickel, Australian in today's dollars, but at a phenomenal grade, 2.8 to 2.7% nickel. There are no nasties or deleterious elements, aka arsenic, in our ore, which is a desirable quality for concentrators, which is something that we're extremely excited about. As we get that ventilation in and we can do more engineering work and more resource development work on the nickel opportunity, we'll be looking to see if we can take this PEA, which was announced in August of last year, to the next level. Can we update that? I mean, the return metrics there are phenomenal. This is bringing nickel production on an annual basis up to about 1,500 to 2,000 nickel tons per year. Historically, nickel-wise, as I mentioned, it was a nickel mine for 35 to 40 years previously. The mine was doing about 3,000 nickel tons plus. Can we get it there? That's what we're going to be evaluating next. But again, we're leveraging the existing infrastructure, so the upfront capital costs are far lower than they would be for other projects, as highlighted on this slide. So stay tuned for more nickel information as we are able to get into those areas and do more work. Certainly an interesting project for 2024. With respect to where we send our nickel, we actually send it 4 kilometers up the road to the BHP Compalta nickel concentrator, so it's basically immediately next door. We were trucking at 440 kilometers to their other Leinster nickel concentrator, so that's a huge advantage from a cost perspective. The point here being, we will never have to construct our own nickel concentrator, nor do we have intentions to, so a huge advantage for us. They actually buy the ore directly off surface from us, which is a great advantage for us for sure. One of the key factors in terms of us delivering nickel to them as well is that carbon neutrality initiative. Of course, BHP has an offtake agreement with Tesla, which requires, who requires, I should say, carbon neutral nickel. So that's a huge advantage for Beta Hunt. So all these strategies kind of tie into to each other to sort of to benefit multiple parties, which is fantastic. With respect to how much bigger the nickel can get, this is that same plan view you're seeing on the left-hand side that we saw in gold previously with those shear zones. As I mentioned, that 3-kilometer untested area between the Gamma Fault and the property boundary, that's an area we're very excited about. We've delineated about 800 meters of that. You see it in the green box shown there on the lower right-hand side. That's part of our resource. About 400 meters away from that, or 1.2 kilometers as shown from the historic, from the Gamma Fault, is a historic surface drill hole that's 9.5 meters of 11% nickel. Now, these nickel troughs tend to be very, very continuous until they hit structure. structures. As you can see on the upper left-hand portion of that graphic, where those red dots are, they basically continue until they hit one of those black dotted lines, which are the faults. So point being, unless you have a cross-cutting structure, you expect these lava flows to continue. So it certainly bodes well for us expanding that resource another 400 meters. Does it extend all the way to the property boundary? Who knows? We certainly can't say yes today, but we also can't say it could not. So significant nickel potential at Beta Hunt. And just for context, historically, about 66,000 nickel tons were mined. We already have half of that in resource today, which is a big deal. Switching over to Higginsville, and I do want to leave some time for questions here, so I'm going to speed through this a little bit faster. Higginsville, as I said, is critical over the last several years here. We do continue to mine several deposits at Higginsville. We're at Aquarius right now, switching into Pioneer as an open pit. It's a series of open pits and smaller undergrounds. We'll continue to move through the highest value targets of those over the course of the next couple of years, but really Beta Hunt is swallowing up most of the milling capacity. We do have some phenomenal exploration targets at Higginsville, such as the Sleuth Trend, which we're excited to get into once we have the cash flow to basically freed up from the capital program in Beta Hunt to go aggressively explore there. Lots of targets to work on there as well. But of course, the return via drill dollar, return via investment dollar, Beta Hunt is phenomenal right now. Spargos is a wonderful addition we announced in 2020. We mined out the open pit. We're looking to go underground there in 2024. Expect that to be a nice little underground mine as well. That'll deliver ounces to the mine plan going forward. And then we also announced the spin out of our lithium interests in Cali Metals over the course of, or I believe we did that a couple months ago. And that'll happen over the course of this year to help accelerate value there without distracting management time and attention and requiring Karora dollars. So that really wraps up the presentation. This is a revaluation slide in terms of where the 200,000 ounce a year producers are. That's what we're going to be growing into, of course, and target market caps you can start to think about. I'll leave it on this slide here, which is a standard analyst coverage slide, but I'm going to hop over some of the questions here. We have about 3.5-4 minutes left here. I do want to answer some of the questions I've seen popped into the chat here as I've been presenting. So I'll start off with the first one. It says, should the addition of Lee Junk to Karora's leadership team be seen as a stronger commitment to ramping up the nickel side of Karora's business? Good question. The answer is absolutely yes. That's one of his core focuses as he's taking over the Australian business and running it. Given his background there, he's squarely focused on the nickel. So the answer there is yes. The second question I see here is, when will the capital spend associated with the growth plan begin to reduce? Another good question. So as we get off of the ventilation raises over the course of this year, we see a bit of a step down in the capital. And then, of course, we have the expansion at Lakewood, which extends into next year. So by about mid-2024, you start to see that capital come down. We are going to be ramping up mining activities next year as we have that ventilation in to bring new stopes online, but we'll really be off that capital spend, the elevated growth capital spend in as we exit 2020, the second half of 2024, which is really important. Next question here is, when will the next drilling update be provided? Can you tell us the areas that you're currently focused on? So we should have an exploration update out here in the next several weeks. One of the areas that we've been focusing on at Beta Hunt has been the Mason Zone. That's next to Larkin. From a true exploration standpoint, that's where we've been focusing. So we expect to have some results out on Mason, which is good, as well as some infill results on Larkin. I did mention one of the core focuses of the program this year is infill drilling. So we'll be infilling Larkin. We're infilling Western Flanks and A-Zone. We should have some infill drill results there as well. So expect a press release on some of that work. We're also following up on those phenomenal holes at Fletcher to see if we can find more continuity to fill in that 900-meter gap. If we are able to find mineralization there that proves continuity, that's a huge step forward for us. So that should be the next press release as we get those results. Next question, what are the drivers of a projected reduction in 2024 AISC? And can you continue to realize cost efficiencies? So yeah, a couple things there. We are starting to see diesel come down a little bit, which is nice to see. But also, as we get the operations scaled up, as we see economies of scale, as Beta Hunt starts to get bigger from a production standpoint, some of those fixed costs are spread over more tons, which helps to drive that reduction as well, which is very important. The whole point of expanding your business, of course. So that's important. And then we should see a bit of a ramp down, as I said, on the growth capital side. So overall total capital costs coming down a little bit as well. Good question there. Another one, what cash raises are needed for the balance of 2023? So based on our current plans today, we have about $70 million as we announced in the on the balance sheet, which is critical. And we want to maintain that cash balance as we move forward. So we're very, very well cashed up there as well. I see I'm getting an alert that we're right in the last 20 seconds of the presentation. I'll see if I can squeeze in one more question here. What have we got? That's a long one. What are some of the catalysts we should look forward? So exploration updates, obviously production updates, and then we'll be presenting at all the conferences as we move forward. So that's all I have time for today. Thank you everyone for your time, for listening, and we'll catch you on the next OTC presentation.